Astera Labs is drawing a surge of attention heading into its upcoming earnings report, as both Wall Street analysts and the broader investing community grow increasingly bullish on the company's positioning at the heart of the AI infrastructure buildout. Several analysts have recently upgraded their outlooks or reiterated bullish stances, pointing to strengthening demand for Astera's high-speed connectivity and semiconductor solutions that enable data to move efficiently between GPUs, custom AI accelerators, CPUs, and memory. With hyperscalers and cloud providers aggressively scaling next-generation data centers, Astera's portfolio of PCIe, CXL, and advanced connectivity products is viewed as mission-critical plumbing for modern AI systems. Among retail and momentum-focused investors, the dominant narrative is that Astera represents a classic picks and shovels play on artificial intelligence, not tied to the success of any single AI model or platform, but instead benefiting from the entire ecosystem's growth. As one common refrain across social platforms puts it, no matter who wins the AI race, they all need Astera's connectivity. That belief is translating directly into price action. Many investors describe themselves as buying the dips, treating recent pullbacks as opportunities rather than warning signs. The view is that temporary volatility is being driven more by macro sentiment or short-term trading flows than by any deterioration in Astera's fundamentals. Into earnings, expectations are building for strong revenue growth fueled by hyperscaler demand, improving margins as higher value products gain share, and bullish forward guidance reflecting a deepening design win pipeline. The community sentiment is cautiously optimistic but confident. While a blowout quarter isn't guaranteed, many believe the underlying trend remains intact and that Astera Labs is steadily cementing itself as a foundational supplier to the AI data center era. In short, the mood around Astera Labs is less about a single quarter and more about a multi-year story, one where the company continues to quietly benefit as the global AI infrastructure machine keeps accelerating.
Okay, so the stock gained 18.93% yesterday, the 6th of February 2026, with a volume of 7.29 million shares, slightly above its, not slightly, yeah, significantly, I would even say close to 50% higher than its 50-day average. Okay, let's see what we have. Underlying trend strongly bullish. The extrapolation of its 3-day moving average is indicating that the strength it has may remain in place up till Wednesday the 11th. After that, there's a prospect of a contraction towards the level it was as of Wednesday the 4th. Okay, so that was yesterday printed. Yesterday made it second straight session of gains on the stock. Yeah. Yesterday was the second straight session of gains. After that, we are looking at an attempt to bounce, but it's indicating that the 40-day moving average is going to serve as a staunch resistance. So it's anything, and if it pulls back, there's a chance it may remain below its 40-day moving average up to the 19th of March. Currently, projections are saying 155.72, 142.70, 134.66. Let's see whether it printed any intraday high yesterday. No intraday high. But in any case, for further analysis, we have gathered the data from this daily chart and then some on the 4-hour chart, and we have them here. So the stock posted a massive 18.93% single day surge to $169.85, blowing up through multiple resistance levels on heavy volume. This is classic earnings anticipation or leak-driven momentum. Yeah. Critical technical conflicts. Okay. Price versus moving average structure. Currently trading at 169.85, significantly above its 10-day moving average, 21-day, 40-day. This is an extended position, roughly 7.4% above its 10-day moving average. Okay, price pressure momentum analysis. Okay, the price pressure momentum tells us the appreciation or the depreciation of the moving averages. Okay, Okay, 0.1 on the 10-day moving average. The 10-day moving average is gaining. Okay, only 1 cent daily, essentially stalling. Okay, but it's still improving. It is improving. It was actually worse than that before. It is improving because the stock was actually contracting. It wasn't a leg down, if you like. It had a downward wave before this strength kicked in. Okay, so yeah, the 21 days neutral. Okay, 40 days bearish, yeah, neutral to bearish, and then 200 day, as indicated earlier on, stronger trend mode, still trending regardless. The disconnect is critical. Short-term moving averages are in bearish / neutral territory, while price is exploding higher. This suggests unsustainable extension from mean reversion perspective. Okay, well, one can say yes, maybe this the amount of strength the amount of strength it has shown over the last 2 trading sessions maybe hasn't been it could have been better. Yeah, could have been better. Yeah. Okay, market grid probability analysis. Okay, market grid gives us a range of possible prices and keeps on adjusting with prevailing circumstances. Okay, so it's above RXT. I don't exactly know which is whether this. Okay, this is on the daily chart. Okay, so because it has it happens, the market grid on the daily chart hasn't adjusted. Okay, so the stock is now trading up outside of that grid, above it and outside. So it's saying here it sits above all the risk levels, essentially in a blue sky breakout territory. Okay, so these are the probabilities of it retesting some of those prices, pulling back to those sort of levels. And then we have the 4-hour chart here. There's yeah, okay. Yeah, so here it's within the grid. Okay, so let's see here below S1, 80 to 95% probability of initial test. 172 R1. Okay, breakout to such level will be 25 to 30%. 179 to 3.4, 10% of that happening. Okay. Yeah. Okay. In any case, just you can pause and read. I can't control the noise here